Can we really make money in the stock market? Or is the stock market just a big casino? Let's find out. Hi guys, Stanley here. It is true, most of the people in the stock market are just gambling. This is happening both among retail investors and even professional investors. It is almost like a roulette table with people betting on random stocks. And similar to all game of luck, some will definitely win big, but it is not a very good way to make money consistently. The good news is that just because the stock market is like a giant casino, it does not mean that serious investors like yourself would have to play the game as everyone else. For example, in the casino, there will be people who are good at counting cards, say in the game of blackjack. Many are so good at consistently winning money that the casino have to ban them. In the stock market, there are also groups of investors who are constantly making money. One such group are the value investors. And we all know the most famous of them all, the Oracle of Omaha, Warren Buffett. When I'm talking about value investing, I'm not just talking about investing in cheap stock, but rather we should view stocks as businesses, then evaluate the business that we want to invest in. It can be a company that is trading cheaply, but it can also be a fast-growing company that have good potential like Microsoft or Alibaba Group. Value investing is a proven strategy that allows long-term investors to build wealth in the stock market. However, to become successful in investing, we must first be able to create the right mindset. So here are 7 key things you need to know to be a successful investor. Number 1, we have to view stock as a part ownership of a business. The mentor of Warren Buffett, Benjamin Graham, once said that investing is most intelligent when it is most business-like. What he meant was that stocks are actually something tangible, like a house, your car, or even gold. It represents a part ownership of running a business. And that leads us to number 2. Investors should not be interested in just the stock chart of a company. Instead of seeing the stock as just a number that moves up and down, we should see it as a real business that you want to become a part owner to. The stock chart doesn't mean anything. It is just a collection of people's opinion on the value of the company at that point of time. And the stock market is constantly being influenced by the emotions of other investors, the news, and other macro factors. And how we can avoid being sucked into chasing the stock prices is by first understanding our third point, which is because we cannot control all the factors in the stock price, we have to view stock as a business person. This means that we should focus on the fundamental of the business instead of worrying about what will happen tomorrow, say to interest rate or what the election result is going to be. We should evaluate if the management is of high caliber and if the business is profitable. And also if the prospects are looking good and how well the company is doing against their competition. That should be our factor that we focus on rather than the day-to-day stock movement. Number 4, we should be finding companies where we are optimistic about in their future. We want to invest in companies that will continue to do well and not just because the stock price looks cheap at the moment. Think of investing like shopping. If we buy a product that is cheap but is of poor quality, we will still be wasting our money. So we should really shop for stocks in the similar manner. We want companies with good prospect and also good quality. And after that, then we worry about what price we can buy them at. In order to know how to differentiate a good company from a bad one, we must learn to spot the risk and opportunity in a business. And number 6, we need to learn how to value a stock as well. All these we will talk through as we go through our lessons. So don't worry, you guys are on the right track. And lastly, we must have the patience and mindset to invest in for the long term. View investment in terms of years rather than minutes or months. Most likely, preferably at least 5 years. But why should we have a long-term time frame? This is because a growing company will always see their stock price appreciate over the long term. The most classic example is the company of Warren Buffett, Berkshire Hathaway. A $1,000 investment into this company in 1964 when he first took over the company will now be worth $27 million. That's a 27,000 times increase in value. And that phenomenon can also be seen in our Asian markets. An investment in, say, Carlsberg Brewery Malaysia back in 1992 will be worth 60 times today. Or even Singapore listed company AEM Holdings have rallied more than 10 times since 2005. We can also see such multi-baggers very often in Hong Kong market, say like Tencent's holding, which has increased more than 600 times since 2004. So can we really make money in the stock market? Even the Asian stock market? The answer is yes, but the stock market is not a get-rich-quick scheme. Only with the right mindset and skill set and a little bit of time on your side, you can indeed find success in the stock market. So that's it for our first lesson of our basic investment course. If you want to gain access to the entire course for free, do remember to click on the link below to get started. That's it from me. My name is Stanley. I'll see you in class 2. Till we meet again, invest safely.